Hello, and welcome to What Would Peter Lynch Do, where we explore the wisdom of the legendary investor Peter Lynch. Today is May 27th, 2025.
And, interesting day in the markets.
Yeah, the market actually finished up today, boosted by the Conference Board Consumer Confidence Index, came in at 98.
Which was quite a bit higher than the forecast, right? Wasn't it expected around 87.1 or something?
Exactly. So, a nice beat there.
And that index, just for listeners, it's basically measuring how confident consumers are feeling about, the economy.
Right, and it's seen as a pretty important leading indicator for consumer spending.
Which, of course, drives a huge chunk of overall economic activity. So a higher number generally means people are feeling optimistic about what's coming.
Definitely. So that positive backdrop brings us to today's listener question. Someone wrote in asking this, and I'll quote it directly. I have a lump sum of money that I need to use in 1 month. Is it okay to invest it?
Okay. That's a classic dilemma, isn't it? Needing money very soon, but maybe seeing the market look a bit tempting.
Exactly. You've got this chunk of cash. It's earmarked for something important just 4 weeks away. That's a really tight time frame.
It really is. And the fact that you need it that soon, it really highlights the risks involved, doesn't it?
It absolutely does. That potential for losing some of the principal, even a small amount, becomes a massive factor when the deadline is so close.
Precisely. Because even though the market was up today on good confidence news, which is great.
Yeah, it feels positive.
It feels positive, but does that short-term positive feeling justify risking money you absolutely need in just a month? That's the real question.
It's easy to get caught up in that, isn't it? The daily ups and downs, the positive headlines. But is it smart for this specific situation?
Probably not.
Yeah.
Those positive economic signs can boost the overall mood, sure, but investing has to be tied to your personal situation and your goals, and a 1-month time frame. Predicting market moves over that short a period is, it's incredibly difficult. You need to be super cautious.
Yeah, this really brings us back to that fundamental advice you hear all the time, right? Invest with money you can afford to lose, or use surplus funds.
Exactly. There's a very clear reason for that advice. Money needed for living expenses, or, like in this case, for a specific, unavoidable payment in the near future. That's generally not investment capital.
It's a different category of money, really.
It is. And Peter Lynch, he talked about this constantly. He really emphasized that investing is about the long haul. It's about participating in a company's growth over years, not trying to make a quick buck on short-term price movements. That's speculation, really.
Right. So money needed in a month falls much more into the preserve capital bucket than the grow capital one. Safety becomes paramount.
Absolutely. The primary goal has to be making sure that full amount is there when you need it in 4 weeks.
But, okay, let me play devil's advocate for a second. What if the listener thinks, the market is looking good, maybe I could just put it in something really, really safe, just for a tiny gain, something super conservative?
I understand the temptation. I really do. But the truth is, nobody can guarantee anything in the short term. Even the most conservative investments carry some level of risk.
Even if it seems small.
Even if it seems small, there's always a possibility of losing a bit of principal. And over just 1 month, is the potential tiny gain you might make really worth the risk, however small, that you might lose some of that essential cash?
That's a good point. The risk-reward is really skewed badly there.
It is. And we haven't even touched on the psychological side yet.
Right, like knowing you absolutely need that money back soon.
Exactly. If you invest money you need in a month, every little dip in the market, even a tiny one, is going to feel incredibly stressful.
You'd be checking it constantly, worrying.
Right. And that anxiety can easily lead to panic selling. You might sell at a loss simply because you can't handle the stress, or because you fear it might dip more before your deadline.
And you don't have the luxury of waiting for it to recover because you need the cash.
Precisely. It forces you into short-term thinking and potentially locks in losses. It's a classic trap.
So that other piece of advice, only invest what you can afford to lose without impacting your life. That fits right in here too.
Perfectly. A lump sum needed in 1 month? By definition, you probably can't afford to lose any of it without it causing a problem. So taking any risk, even seemingly small, just isn't prudent.
Okay, so coming back to that listener's direct question, I have a lump sum of money that I need to use in 1 month. Is it okay to invest it? Based on this, and filtering it through Peter Lynch's philosophy, the answer seems pretty clear.
Yes, I think viewed through that lens, the answer has to be a clear no. Right now isn't the time to chase potential investment returns with that specific money. The focus has to be 100% on safeguarding the principal.
Makes total sense. Okay, so let's bring in today's Lynch quote and talk a bit about how this principle isn't just for investing, but really connects to broader life wisdom.
Sounds good. A very relevant quote from Peter Lynch is, invest in what you understand.
Okay, invest in what you understand. How does that apply here?
Well, on the surface, it's about knowing the companies you buy stock in, right?
Yeah.
Understanding their business.
Sure. Do your homework.
Exactly. But it goes deeper. It's about understanding the nature of the investment itself, including the risks. Investing money you need in 1 month. That means you're betting on short-term market movements. And predicting short-term market movements with any certainty is something, frankly, nobody truly understands or can control.
I see. So investing that money would be putting it into something whose short-term behavior you fundamentally can't understand or predict reliably.
Precisely. You'd be operating outside your circle of competence, so to speak, regarding the predictability needed for such a short time frame. And this idea, this principle, it really applies way beyond just stocks.
How so? Like in life decisions?
Yeah, absolutely. Think about any major decision. Don't jump into things driven by, say, short-term excitement or the fear of missing out without fully understanding the potential downsides and long-term implications.
So it's about avoiding rash decisions based on incomplete understanding, whether it's finances or anything else.
Exactly. It's about favoring stability and predictability, especially when the stakes are high, over chasing uncertain short-term gains. It's about patience and making informed choices based on genuine understanding, not just hope or hype. That's a pretty solid piece of life wisdom, I think.
Yeah, that really resonates. Understand the risk, understand the time frame, understand yourself before you act. Okay, great takeaway. Well, I think that's about all the time we have for today's deep dive.
Right. So we'll see you next time on What Would Peter Lynch Do?
Thanks so much for joining us today. Have a great day.